Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 30th of June. ECB not in a hurry, but will it do more? Speaking at the ECB's Forum of Central Banking yesterday, ECB Vice President Vítor Constâncio said that the bank has to wait a little bit to see how Brexit is going to affect the Eurozone before assessing whether further stimulus is needed. Constâncio added that the market impact has been somewhat contained thus far, with recent counter moves across all market sectors indicating a certain stabilization. Immediately after the Brexit official results, the ECB said that it stands ready to add further liquidity into its market, but thereafter it has appeared more hesitant with regards to near-term easing, given the calmer than expected market reaction. Nonetheless, we do believe that the bank is likely to do more, albeit not immediately. In the aftermath of the vote, the bloc's 5-year inflation expectations plunged to an all-time low level. Expectations currently stand at levels notably lower than those in March, when the bank unleashed its barrage of easing measures. We therefore expect that the combination of Brexit uncertainties and the latest decline in the 5-year inflation expectations are likely to prompt ECB officials to act again at some point this year. As for today, during the European Day, Eurozone's preliminary CPI for June is due to be released. Both the headline and core rates are expected to have ticked up. The forecast is supported by a similar rise in Germany's CPI rate for the month. This could benefit the euro somewhat, at least temporarily. The ECB will also release the minutes of its June policy meeting. Even though at that meeting the bank signaled it was likely to remain on hold while implementing its previous measures, a possible discussion on how the ECB could react to a Brexit could still attract some attention. In the UK, the final estimate of GDP and the current account balance, both for the first quarter, are due to be released. Considering that the second quarter is almost over and that the UK's vote to leave the EU may have been a game changer for the economy's outlook, we believe that these data are likely to be seen as outdated, and hence any reaction in the pound could remain muted. We prefer to wait until July data are released in order to gauge the UK's performance in the post-referendum era, although the Bank of England signaled that even those figures are likely to be distorted and should be treated accordingly. From the US, the Chicago PMI for June is forecast to have risen above the critical 50 line following an unexpected dip into the contractionary territory last month. Initial jobless claims for the week ended on the 24th of June are forecast to have increased, something that would leave the 4-week moving average unchanged. In Canada, the GDP for April is expected to have risen on a monthly basis, something that could support the loonie somewhat. We have two speakers on today's agenda: Bank of England Governor Mark Carney and St. Louis Fed President James Bullard. Even though the Bank of England did not reveal what the subject of Carney's speech will be, the fact that he was scheduled to speak at short notice makes us believe that investors will pay close attention for any forward guidance on the bank's rate path. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.